have joined this virtual event. My name is Ranadi, and I am the monitoring and evaluation lead for the joint UNCDF UNDP programs in the Pacific, and I will be your moderator for today. So today's webinar is all about showcasing some of the lessons learned from the UN-led climate and disaster risk financing and insurance program in the Pacific. This program commenced implementation in 2021. I apologize, I have a bit of a cough and a rusty voice. And the program ran for a pilot of 2 years, covering Fiji, Tonga, and Vanuatu. So with the successful completion of the pilot program, the program is now expanding to an additional 5 Pacific Island countries, while gap analysis and feasibility studies are currently underway in 4 African countries, which includes Senegal, Malawi, Sierra Leone, and Niger. So I would like to acknowledge the donors that have supported this initiative, which includes the government of New Zealand, the government of Australia, India, and Luxembourg. So before we proceed any further, just a few virtual housekeeping rules. If you have any questions towards any of the speakers, kindly request that you reserve those questions for the Q&A session towards the end of the webinar. Or if it's easier, you can drop them in the chat box, as well as the speaker to who you are directing those questions to. So I will now take this time to introduce our first speaker, who will be providing the keynote address, which is Mr. Esala Masitambua, who is the current Deputy Governor of the Reserve Bank of Fiji. So Esala, over to you, please.
Thank you, Ranadi. Bula Vinaka, and warm greetings to all panelists and participants. On this webinar, Adapting for Success, the key lessons from implementing climate risk insurance solutions in the Pacific. It is indeed my privilege to be representing the Reserve Bank of Fiji. From the outset, let me just acknowledge the contributions that UN Capital Development Fund has made to the development agenda in Fiji, in particular to the financial inclusion journey in this country that the Reserve Bank has been pioneering since 2010. As we are aware, Fiji and the Pacific are extremely vulnerable to the impact of climate-induced extreme weather events and other natural hazards, cyclones, floods, earthquakes, tsunamis, droughts. The economic impact caused by these events runs into millions of dollars each year, seriously affecting the growth and the prosperity of our countries and its people. And for a long time, a lasting sustainable solution to address and offer immediate financial redress to the affected vulnerable communities has been eluding the region. All this changed in 2021 with the inception of the UNCDF Pacific Insurance and Climate Adaptation Program, or PICAP as we now know it. Since 2021, we have been closely engaged with the UNCDF PICAP, and who have created a landmark in the Pacific region's fight against the impact of climate change. UNCDF has put together an ecosystem of private and public sector partners actively supported by government and established a proof of concept that has demonstrated that market mechanisms have a significant role to play in addressing the economic impacts of extreme climate events. In August 2021, in the height of the pandemic, PICAP, together with other private sector insurers, aggregators, insurtech partners, developed and launched the region's first ever parametric microinsurance in Fiji. Subsequently, these products have been piloted in Tonga and Vanuatu, 2 other highly climate vulnerable countries in the region. In the pilot phase, which completed around December 2022, the program had achieved significant results and covered almost 5,000 households in Fiji, Tonga, Vanuatu by its parametric index-based micro-insurance schemes, providing protection against cyclones and excess rainfall. Small holder farmers, fishers, market vendors, small business owners can now have access to these innovative climate risk insurance products, digitally delivered and offered at affordable premiums by private sector insurers and aggregated through cooperatives, association, and our development bank. So parametric microinsurance to these vulnerable sectors is an important financial instrument in their risk management toolkit, a tangible response to the loss and damage that these vulnerable communities face after each extreme weather event. So the Reserve Bank of Fiji supported the program by admitting the digital onboarding solution and the parametric product under its fintech regulatory sandbox. This went through rigorous experimentation stage, and this was during the height of the pandemic. And after that rigorous experimental stage involving the various stakeholders in the ecosystem with UNCDF, the test conditions were successfully completed. The government of Fiji has also been extremely supportive of this initiative, and they offered VAT exemption on the parametric insurance premium, a first of its kind globally that we are aware of, acknowledging the importance of such risk mitigating financial tools for the underserved and the vulnerable in our communities. In addition to the robust outreach numbers, the program has also delivered on other results. Solid evidence of the importance of this initiative is its very expansion to other countries in the region and beyond. So I am extremely pleased to know that PICAP has documented its journey over the past 2 years, the inception phase into a lesson learned publication, both to be used internally to shape its future programming, but also as a knowledge product for others. This global webinar, while focusing on the lessons learned in the Pacific, is applicable to other initiatives in other parts of the world and for UNCDF's very own ambitions of global expansion of this program. So it is indeed my privilege to open this webinar, and I wish the UNCDF and PICAP all the success, and I look forward, and we look forward at the Reserve Bank to working closely with the program as we enter the next phase of scaling up and expansion. Vinaka Vakalevu, best wishes to all the participants and the panelists.
Thank you, Esala. As Esala mentioned, PICAP's pilot phase had completed at the end of last year, 2022, and the program essentially worked on a key lessons document outlining the key lessons from rolling out and implementing parametric insurance in the Pacific. So the next two speakers will be taking us through some of the content from that document, and we will start that session with Ms. Akata Taito. Akata worked for the Reserve Bank of Fiji for over 10 years prior to joining UNCDF as the Inclusive Insurance Solutions Hub Coordinator. So over to you, Akata.
Thank you, Ranadi, and very good morning, good evening to all of you. In the interest of time, I will go straight into the lessons learned from our Pacific program during the implementation phase, which we have somewhat summarized into key lessons, these key lessons into 6 thematic areas. And whilst these lessons are from our Pacific experience, this can be applied or considered in similar global program implementation. So I'll briefly talk on the first 3 thematic lessons, and my colleague will then cover the remaining 3 lessons. If we can move on to the next slide, please. So the first thematic lesson is on partnership, which the Deputy Governor for the Reserve Bank of Fiji have very nicely talked on the partnership ecosystem that the program have built during the implementation phase. But what I would like to highlight here is that what we have noticed during the implementation phase thus far is the vital importance of establishing strategic partnerships and ensuring that we have a strong foundation for implementing sustainable climate and disaster risk insurance solutions. Over the last 2 years, we have in total established 21 partnerships at the national and regional level, with a vision of building a holistic ecosystem, looking at partnerships with government agencies and regulatory bodies, so that we are able to pave the way for novel approaches and ensure that we are fostering enabling regulatory environment. We also worked with the private sector partners such as insurance institutions, and what we have seen is, really to enhance their internal capacity. We have seen that there are changes within their institutions, business models. We see insurance companies offering affordable parametric insurance products to low-income segments, a segment which are often ignored in normal or conventional traditional insurance services. We also established partnerships with the agri-farmer agencies and cooperatives, ensuring that we are reaching farming communities or vulnerable groups, but at the same time ensure that these segments are able to access affordable insurance. And most of these farmers, what we've seen is that they're accessing parametric insurance or climate insurance for the first time. We also work with digital distribution partners. We worked with risk modelers, connecting our insurance companies to risk modelers, with data agencies, with reinsurers, but at the same time bringing in other UN partners really under our One UN banner. This allows us to sort of effectively mobilize resources, not only to reach scale, but ensure that all segments of our population are provided with the equitable access to solutions that build their individual financial resilience against climate events. We also have continuous engagement with both public and private sector partners, strengthening financial resilience through risk transfer mechanisms, supporting awareness and education campaigns on parametric insurance at the national and subnational level. And this is mostly done through the disaster risk management or disaster risk financing strategies. The program have made significant progress in this space, but we still see opportunities to more actively engage, particularly public sector representatives, to sensitize disaster risk financing instruments that aligns well with their national and regional priorities. The second thematic area, if we can move on, please, is on developing innovative insurance solution. And there are numerous benefits for offering parametric insurance against the conventional indemnity products, one of which allows for quick cash injections following a trigger event, helping vulnerable populations to get back on their feet. The payouts, of course, are based on transparent and reliable weather data that is continually monitored by risk modelers, which I will let the other panel talk about this more in detail later. What I would like to emphasize at this point is based on the recent payouts in Fiji, is really on the quality of data collected and how quickly this verified data can be made available to determine the payouts. The overall objective of this solution is to ensure that the impacted population or policyholders have access to quick liquidity, and this is highly dependent on the availability of verified weather data. The other innovative aspect of the parametric insurance solution is allowing for a flexible payment plan. And whilst we try our best to work with partners to keep premiums low, we understand that there are some farmers, fishers that may still struggle to pay, say, US $50 upfront. This does not necessarily mean that they cannot afford to pay the premium. It is really the irregularity of their income earned which makes it a barrier or makes it difficult for them to meet such payment requirements. So through our research and the various discussions that we've had with farmers and fishers, we know that they prefer a payment plan that is linked to their seasonal income. So with the partnership that we've established with, say, cooperatives and farmer agencies, we know that, these cooperatives and farmer agencies already have an established financial and non-financial relationship. There's trust between the two parties. And so as an aggregator, they're able to offer or enter into an agreement to offer an upfront payment for the interested members to the insurance company, and over time recuperate from their members in, say, small amounts during cane harvesting seasons. We also have the mobile money platform on the other hand, which have been widely used in Fiji for payments, and these have been tested for payouts where this during the recent payout, the funds were transferred directly into beneficiaries' individual mobile wallets. But we also see that there is still room to apply premium collections in installments through the mobile platform. Whilst the program strongly believe in market-based solution, we know that there is a segment of the population who will never be able to afford parametric insurance, such as those that are already in the social welfare system. So we worked closely with the government of Fiji to design lower tiered products that contribute to national social protection systems. These allows the government to transfer their risk to the private sector to cover most vulnerable segments during climate events, which also allows them room to manage its overall risk more effectively and freeing up their time to look at other big development projects or infrastructural repairs following a natural event. And what happens is that we've seen when risks are transferred to the private sector, insurance companies able to work more effectively and efficiently to ensure that funds would then, in the event of a trigger, a payout would then be directed to individual accounts, helping them to quickly recover faster. The third thematic lesson is on distribution. And this is really right from the design phase. We find that it is important for any program to identify which distribution channel or aggregation model works best or is most effective in scaling up CDRF solutions of climate disaster risk financing solutions. So this could be looking at organizations and groups such as farmer and agri agencies, looking at cooperatives, even more formally financial institutions such as banks, finance companies, development banks, or provident funds. We can also explore savings groups or mobile network operators. Throughout the identification phase, it is important for the program to consider the country setting and the context in determining which group can best act as an aggregator. So in the Pacific, we adopted different models that suit each country context to reach scale. So for example, in Tonga, we use the Tonga Development Bank to act as an aggregator during the pilot phase. And in Fiji, we work more closely with cooperatives and farmer agencies to maximize outreach, but also we've seen that it offers their members convenience, gives them also the opportunity to pay their premium in installments. These agencies, we've noticed, already have formal governance structures in place. So there's assurance that members or beneficiaries are well protected. The digital tool, on the other hand, also offers flexibility. We've seen significant value of the engaging fintech firms that develop on-board platforms where they're able to bring in significant value in simplifying and streamlining processes from the overall onboarding and registration of members with reduced eKYC requirements, all the way through to payouts and collecting premiums. However, when we look at the digital platform, we needed to consider the level of national digital infrastructure and the digital literacy. So looking at the level of digital literacy of the population and ensuring that appropriate approaches, awareness are in place to build their digital literacy. Partners also need to make the most of such platforms to improve the data quality, but at the same time, the timeliness of data sharing between, say, the pharma agencies and the service providers. And by acknowledging and unlocking the true potential of digital platforms, we know that programs can then be able to, say, create more efficient, effective, and sustainable implementation of climate and disaster risk insurance solutions. So with that being said, I will stop here and I'll hand over back to our moderator. Thanks.
Thanks, Akata, for that. We will now give the floor to Ms. Sinia Buri, who will take us through the next three thematic areas from the lessons learned document. So Ms. Sinia Buri is the PICAP project manager at the United Nations University Institute for Environment and Human Security. So the UN University is one of PICAP's implementing partner and is basically responsible for providing technical and research support to the PICAP program. So Sinia, over to you, please.
Thank you, Ranadi, and good morning, good evening also to everyone. Yeah, so I'll cover the next three thematic areas. And Akata already talked just now about outreach and literacy. So the next theme is about outreach and capacity building. One of the key lessons here is that, the product communication material should be created in a digestible format for all the stakeholders. So that means really talking about the key aspects also of parametric insurance, making sure that stakeholders understand and beneficiaries understand what's basis risk, what are triggers, what does it mean when triggers are met, the timing until a payout. This is important not only for general understanding, but also consumer protection and of course, satisfaction with the product. That means communication not only for the end beneficiaries, but really also all the stakeholders, being from insurance companies to government and aggregator partners, because especially, for example, in the Pacific, these were the first products of this kind being introduced. So a lot of education outreach is necessary. I just talked also about basis risk. So basis risk means there could be a payout, although the policyholder doesn't have a damage, or there could be no payout, although a policyholder has a damage. And that can also, has a damage. And that is a risk. And although the solutions are advancing, there's still this basis risk there. So it's important to communicate that and to have transparency, to share data after a payout also with the stakeholders to show why payouts were made or were not made, to also have trust in the product. Another one is continuous outreach and awareness raising activities are essential. So it's not only at the beginning about, explaining the product and then there's a sign up and people use the product, but there's a need for continuous education and awareness raising, so that also when payouts happen, people will still understand how it works, and especially for a new product such as parametric insurance. An important point to consider is also that social norms can affect access and inclusion of women and other vulnerable groups. So despite advances, we still see socio-cultural barriers also in women accessing these products, as well as in financial decision making on household level, and that's affecting also, of course, the use of the product. So what we see is that, for example, even for awareness raising campaigns where women were invited to the same extent as men, they were not, necessarily always showing up because they didn't feel it was the role of the men usually in community meetings to speak up, or they didn't feel comfortable to speak up. So it's important to do gender assessments. It's important to look at these aspects and to then customize the outreach activities and educate the men, engage in people that are supporting women's economic empowerment. And the program has done so also by engaging with agencies that are supporting women and other vulnerable groups or maybe excluded groups to make sure we reach them to the same extent. So with that, I would go to the next one, managing for impact and sustainability. Clarity of roles among all partners is key for long-term viability. That really means also, the program was very involved at the beginning, for example, also in building networks, in the awareness raising. Aggregator partners, such as cooperatives, were very involved in helping to explain the product to their members, to the farmers and fishers that we want to reach. But that means also, or that comes at a risk, that there's a disconnect between the insurance company and the end beneficiary, or the people we need to serve. So including the insurance companies, having them take ownership also for awareness raising activities, for marketing the product, and building that trust and confidence and link between the end beneficiary and the insurance company is very important, so that these roles are becoming clear for longer term engagement and sustainability, even after the program ends. Another point here, what is important is setting and communicating realistic timeframes for product sign up, but also payout processes. So it doesn't serve anyone to have unrealistic timeframes, and small details need to be thought through. Kind of how long does it take to have data available? What are the processes to get a payout done? What does it take the time for stakeholders to coordinate for a payout? So to be very realistic upfront, also with the end beneficiaries of how long it could take until a payout happens. And then also, product sign up phase. Usually that's done just the weeks before the hurricane season, for example, and to not underestimate how long that takes, and to even start earlier so that it can be made sure that the beneficiaries or the policyholders are all onboarded well in time before the season starts, where most of the hazards occur. It's also very important to engage local community leaders because it's a lot of the target groups we work with. Often it's maybe the first contact with the financial system, and also ensure and to build that trust and to have someone in the communities who can help bridge basically the communication between the policyholders and the insurance companies is important. It's important also, coming back to the other point, that these community leaders are also supporting, the economic empowerment of women and other vulnerable groups. So that can be looked at the same time for financial protection. And then we can go to the last point, which is evidence-based programming. So at the beginning of the PICAP program, there were especially demand studies done at the beginning, looking at the hazard exposure of the people we want to serve, looking at how they're dealing with events and disasters financially, even without the existence of insurance already, and how if they have different preferences for insurance products. So that was used as a basis for product development. But going forward, also, it's important to even do more comprehensive country studies, looking at the supply side as well as the demand side, looking also at sort of the whole enabling environment and the stakeholders, and identifying any points that could hinder basically the success of a program. And not only before starting to engage in a country, but then also evidence is important going all along during the project. So creating feedback loops, are we, reaching the people that we want to reach? Are we reaching, 50% women, for example? And does the product help to do what it's supposed to do, or can it be refined? So we're very aware that iterations are necessary, and even during the first years of implementation, the product has gone through iterations. So having that feedback loop from the policyholders, but then also all stakeholders, about the processes, about the use of the digital platform. And then small things come up, like we learned that mobile money numbers become or telephone numbers become inactive after a while. So then talking to mobile network operators to make sure they're not deactivated, so that payouts can happen even after inactivity. So these small things are really coming up only through constant listening and feedback loops, even once the product is introduced. Yeah, so that were the 16 lessons learned that we identified, and with that I'll hand it over back to Ranadi.
Thank you, Sinya and Nakata, for that overview of the lessons learned captured in that document. Just a quick reminder for our online participants, if you have any questions on some of the lessons learned that was captured by Akata and Sinya, please do drop them in the chat, and this will be addressed in the Q&A session. We will now move on to our online panel, who will be providing comments in their area of expertise as it relates to some of the key lessons learned that's highlighted in the publication, which will be launched towards the end of this webinar. So on the panel, we have Anuj Kumbat, who is the CEO and founder of the Weather Risk Management Services, WRMS. We also have Janina Voss, who is the acting head of secretariat from the Access to Insurance Initiative. And we also have Velawa Rere Wasaliwa, the director of the Tower Group Services. So we'll start with Anuj. Can you tell us briefly one or two key data challenges around the development of those parametric climate risk insurance solutions? So the data challenges can be in relation to the product modeling process to data verification when triggers are met for payouts.
Sure. Thanks a lot, and I hope everyone is doing great. Am I allowed to share my screen?
Please go ahead.
Sure. Is my screen visible?
If you can put it on presenter view.
Is it visible now?
Yes, it is.
Sure, thanks a lot. Yeah, thanks a lot. Thanks, everyone. I would share the key learnings and how did we go about designing the product, and what were the key learnings when we designed parametric insurance for the first time in Pacific Island countries, and what these lessons which we have learned entailed us to do, and what sort of change we have done in the product in terms of the iterations or the new improvements which we have brought in the product, which basically was taking into account the feedback we have received during the product design and also while implementing the program. And some of these lessons are also something which we are taking into account while we are doing our study in Africa right now for parametric index insurance demand and supply. In terms of design, it's quite simple and straightforward for people to know that what we do is that we identify the locations which we need to cover. So basically the key weather variables causing the losses, and then periods of losses that are significant. Analyze, then review the data availability in terms of multiple sources of data, and then develop the index and also attach the relationship between what is basically what index basically best captures the calamity or loss which has happened in the. So we basically do the hindsight, and once we have evaluated what could be the maximum loss what sort of payout or damage ratios are there each time. The premium expectations from the perspective of distribution. So that's how the product design process works, specifically for Pacific high amount of rainfall and cyclone. And it was important for us to really look at covering these key risks from the perspective of occupational groups, which we are trying to cover. And we analyzed not just the ground station data or surface weather data from Fiji Met office. We have also looked at data sets like ERA5, ECMWF, ERA5 land and ocean, and also the chirps and global precipitation measurement data. This was basically for precipitation. The evaluation was based on various parameters, including latency of the data, update frequency, and how soon. What is the quality or granularity of the data? What's the grid size, and how far the location of station, in case it's a physical station, from the insured locations is. So based on this analysis, we zeroed it on for the first pilot. We basically went on with the chirps data sets. Again, primarily because of greater consistency and the grid resolution was better. It was also correlating well with the ground losses. Secondly, for the cyclone risk, primarily again the evaluation was based on what sort of update frequency and data frequency which is available from the temporal perspective, and what is the spatial data accuracy from the past event. And that was done using developing an event calendar and matching the data sets. We analyzed 2 or 3 different sources of data, and finally, again, zeroed in on JTWC, which is US agency data sets, US Navy data sets. And again, the idea was to capture the key events which have happened in the past and how well they are correlating, and what sort of data reliability and accuracy which is there with this data point. And another advantage here is that temporally JTWC is 1 minute sustained wind speed, which captures the wind speed much more accurately. And also the data temporally was available for every 3 hours. In terms of product design, wind cyclone was a cat in a circle cover, and precipitation was basically a 5-day aggregate rainfall beyond a certain point. So we are trying to capture the extreme events of rainfall. So the data analysis vis-a-vis which sources has to be chosen was taking into account whether the source which we are choosing is capturing the extreme rainfall well or not. And in this case, again, because of the reliability of data availability and the granularity of data, chirps was chosen over other data sets which we have analyzed. The other key parameter which was important from the perspective of how do we go about designing the product in terms of and the data availability and settlement was the insurance unit. At what level of administrative unit we should settle the claim. While the data of chirps is available at 5-kilometer grid, and it was very difficult for micro insurance solution to capture insured location for every insured or on-field location or every farm in case it's agriculture. So we focused on the lowest unit for which a good polygon or shapefiles are available. And we analyzed these shapefiles, checked the correctness and accuracy of it, and updated it with the help of UNCDF team. Wherein, and in some cases, we had to shift the polygons or I would say the centroids of the polygon to capture the data sets or historical data more accurately. But what we settled on is Tikina. It's basically a group of villages in Fiji. And the idea again was to where we can get a reliably accurate polygons or shapefiles, and we can and which is also granular enough to capture the weather conditions of that area. And I mean more homogeneous in terms of the weather conditions of that area, and that was taken into account while designing. We also did the enrollment data validation, keeping these checks in mind, including, and in this case, there's an IT data services provider, IT Gallic, which also supported us in terms of this, developing a solution around that, wherein data duplicacy check and accuracy and data validation could be done. We also check the completeness of data. Important from the perspective of identifying beneficiary wasn't, because the insurance unit was Tikina, and hence it was important that Tikina details were captured correctly, and we are also capturing the insured details for the timely payout. So all these details were really evaluated systematically using IT-GALEX system as well. Now, in the claim settlement process, we have basically done analysis of multiple sets of data, and after error checking and evaluation, in some cases we have to do data filling, and we have analyzed both CHUBS data and FijiMat data, and there are key lessons there, and I will be talking about those lessons in lessons learned. So based on that analysis, we finally calculated the claims and made the claims payment. There are a few lessons, one related to data sources. What we realized is that while CHUBS and FijiMat data were correlating well, there was a difference in the extreme values of rainfall, which means that the strikes for set beneficiaries have assessment or expectations on account of claim were kind of correlated or were more related to what they could observe on the FijiMat. So, I mean, let me put it this way. Let's say 450 millimeter was a rainfall threshold of FijiMat. The same payout thresholds for CHUBS was 300 millimeter. But beneficiaries were expecting payouts as soon as the FijiMat data crossed 300 millimeter rainfall. So this has been a lesson that it is very important to explain what data differences are and what it entails in terms of the payouts. The second thing was, again, because we are using 3RT data sets, the actual location, because it's a cat in a circle cover, and we were taking centroid, Tikina centroid vis-a-vis the nearest point of data captured in cyclone. In 3RT data sets, we are not actually capturing the closest point. So we basically did the interpolation to manage the basis risk. And also we have changed the basis from Tikina, which is basically level 3 to level 4 in insurance units. And we've gone down to village now, basically capturing the polygons of villages. This took us a lot of time in evaluating and correcting the village polygons, which is now we've been able to do for all the Pacific Island countries where we're working, which is Tonga, Vanuatu, and Fiji. So when we were designing the Tonga and Vanuatu product, we already had the hindsight of Fiji, what we have done in Fiji. And that helped us in basically scaling down or downscaling the spatial resolution of the insurance unit from a district or a Tikina to village and or the area council. So that's what we have done in Tonga and Vanuatu, and also working on that in Fiji. So that's a key lesson which we have incorporated in the new product design. So two key things, basically, one, downscaling the administrative unit, changing the data sets from CHUBS to FijiMat, and for that we've signed an agreement with FijiMat to evaluate basically how the data filling will happen, because there were a large number of data gaps in the FijiMat data, and the process has been defined there. And also how soon we can get the data. Earlier there was a major issue with the latency of the data sets from FijiMat, which is now with an agreement, they've been able to agree on providing the data sets within the time frame. So these are some of the learnings. And as you can see, this is how we have moved from A, C. Earlier we were using point number A and C in this image. Now we have the new product design we've taken. We are interpolating the wind speed and the distance at the point B, which is the closest point from the Tikina. So these are some of the examples I'm just giving. Thank you very much. And if you have any questions, I'd be happy to answer.
Thanks, Anuj, for that. I think we'll move straight on to Yanina. Yanina, sorry, you had supported the development of the index insurance best practice guidelines for insurance regulators and practitioners in the Pacific. Can you tell us a bit on one or two key lessons learned or recommendations when it comes to engaging with public sector partners and regulators for offering this kind of parametric insurance solutions?
Thank you very much, and hello everyone also from my side, and thanks very much for the invitation to join the webinar this morning. And it's a great pleasure for me to share some of the lessons from the A2I's perspective. So just very quickly, for those not familiar of what the Access to Insurance Initiative is, we are the implementation partner of the global standard setting body for the insurance sector, the International Association of Insurance Supervisors, or IAIS. If you could go to the next slide, please. Thank you. And as such, our mission is to work with insurance supervisors and regulators and strengthen their capacity and understanding to promote inclusive and responsible insurance to reduce vulnerability. Now, looking at the lessons learned that we've just heard about, I'd like to refer to the very first one. And as it was said earlier on, there was an active engagement of PICAP with the regulators at all stages of the project. And I think this is a really important point and a lesson that is not as obvious as it might seem at first, because index insurance, we've also heard about that, is a very complex product. It involves a lot of different parties beyond the insurer. And it's not always the case that insurance supervisors are involved at a very early stage. The international guidance that is issued by the IAIS clearly states that pilot schemes should always be licensed to ensure that the interests of policyholders are protected during and also beyond a pilot project. So I think the way that PICAP has gone about engaging with regulators has been really important. As it was mentioned earlier, one of the things we have worked on with UNCDF in this project has been the best practice guidelines for insurance regulators that was published last year. And yeah, I just want to highlight a couple of key lessons from this paper. From an industry perspective, and we can go to the next slide, please. So from an industry perspective, the absence of a legal framework on index insurance and the uncertainty that this creates is really a key barrier for introducing successful index insurance products. And from a regulatory point of view, the challenge here is that the definition of insurance is usually based on the indemnification of loss. So an index insurance product is not recognized as insurance often in the law. And there's often ambiguity around index insurance and weather derivatives around the definitions of that. So there are different ways in which regulators can include index insurance into their legal framework. I guess the most straightforward one is, well, to draft and approve specific legislation for index insurance products. However, if there is a lack of experience on index insurance products in a market, which is true for a lot of jurisdictions to date, the paper actually recommends to take a sequential approach here and to start, for example, by providing conditional approval of index insurance products or a letter of no objection to allow products temporarily, or to consider a regulatory sandbox approach, as it has also been done in the project here. And based only on the learnings of those pilots in the sandbox or the conditional approvals, develop index-specific laws that take into account the learnings that have been taken so far. The report then looks into some best practice recommendations for regulating index insurance products. We can go, yes, thank you very much. That are categorized into 3 topics: clear definitions, consumer protection, and prudential and supply side guidelines. And I don't want to go through all of these in detail, also in the interest of time, but just to highlight 2 points here. And the first one, I think, was also referred to earlier on when it comes to designing the index itself and the issue of basis risk. This is always a big concern when it comes to index insurance and from the supervisor side when it comes to consumer protection concerns. And the report therefore suggests that regulators should really get involved here and define what makes a good index, which means that they specify what key characteristics are, including, for example, the objectivity, transparency of the index, independent verification of the index, and also the data sources that are used should be clear and objectively accessible. And also basis risk is, yeah, as we said before, a key concern that that should be looked at by the supervisor as well. So the report actually recommends to manage basis risk both ex ante, which means that the index should be thoroughly tested with historical data, but also ex post by, for example, introducing secondary triggers or using fallback methodologies to verify losses in order to protect consumers and also to make sure that trust in the product is not lost. The second point I want to highlight is that the report also recommends the regulator needs to understand the rationale behind all product design choices that the insurer has made, and should really ask to clearly explain to explain all product features when the product is being submitted to the regulator by the insurer. And the report also includes a very useful checklist on the product design features that should be part of that explanation. So I think that is something definitely worth highlighting. And yeah, I think I'll stop here for now, but I look forward to further discussing and any questions later on. Thanks very much. Ranadi?
I think Ranadi has. Oh, right.
I'm so
There you go.
sorry.
Here you are.
All right. Yeah. So we'll go on to Velawa. So Velawa Tower Insurance is now offering these parametric insurance products in the market. Can you briefly share with us the value in doing so, and what are some of your key lessons learned to date? And maybe if you also want to touch on the value of leveraging digital platforms for these parametric products.
Right. Ranadi. So just some background on Tower Insurance. We've been in Fiji for more than 140 years and are currently the largest provider of cyclone insurance for houses in Fiji. Despite that, less than 10% of the houses in Fiji have any form of cyclone cover, which is why we have this program. Just some learnings around the program from an insurance perspective. One of the values that we got out of this, apart from the technical assistance and providing us with an onboarding platform where the data was the fact that the aggregators themselves was also doing awareness on the product, and that helped when we went to go and talk to our customers. Quite a lot of them have gone through some form of awareness session, and that made the explanation a bit easier to do. So the other learnings for us is that traditionally, parametric insurance globally is been distributed via aggregators. However, because of the gap that we see in Fiji and in the other Pacific markets that we're in, with under insurance, we've felt that there still needs to be a direct distribution method, and that's what we focused our attention on. And a couple of challenges from there. There's data challenges that WRMS have talked about. There's also location challenges. What I mean by that is at the moment, if we look at policyholders, the tikinas or the villages are quite broad as far as surface areas, and are quite different depending on which village or which tikina you're from. So what we're looking at the moment is seeing whether there are alternative platforms that can actually provide us with actual location data of somebody's house and measure the risk from there. In saying that, the ION board platform has been very helpful for onboarding customers at an aggregator level, for example, working with FDB, the Fiji Development Bank, for that. But also it has been helpful by providing our customers the ability to go and self-service. So one of the 4 most high-risk areas for cyclones in Fiji is a province called Kandavu, where 2 people from one of these villages that actually went online and bought a parametric insurance product themselves using the platform, which is a testament to all the work that has been done by the program to create awareness and make the user experience quite seamless. So I hope that answers your question, Ranadi.
Thank you, Velawa, and to the other 2 panel members who had some very interesting and useful insights around implementing parametric insurance solutions in the market. I think some of the key takeaways that you mentioned, that the 3 of you mentioned, was really the need for solid and reliable data sets that's not always readily available, the need for strong partnerships at the policy and regulatory level, And of course, there's lots of value add in leveraging the digital platforms to offering these solutions in the market. So thank you again for that. We will now move on to the final session, which the final session is will highlight the linkages between PICAP and the V2 Global Shield against climate risk. And we have Nilesh Prakash to present on this. So Nilesh is an advisor with the Secretariat of the V20 Group of Finance Ministers, where he lends climate change policy and climate finance advisory support to the V20 member states through the various work streams of the V20. So as a Pacific Islander, Nilesh has been instrumental in designing the Pacific strategy for Global Shield implementation. So I will now hand it over to Nilesh. Please go ahead.
Vinaka Ranadi, thank you very much. I hope you can hear me well.
Yes, we can.
Okay, brilliant. Yes, thanks very much for the invitation to the V20 to address this webinar. In fact, this is very interesting. I mean, the results which the UNCDF team has presented, this is brilliant. Considering the short span of time it has had with micro insurance, sort of space in the Pacific. You had the 2 years for inception, and now it's sort of leading into bigger and better work into the next 5 years. I think a couple of buzzwords that I sort of figured out from the presentations is that the ecosystems approach that the PICAP program has undertaken. I think that's brilliant, and the fact that there are some players who are already sort of in the market, but I guess what the PICAP program has done is really invigorated the system and really sort of brought everyone on board to deliver on CDRFI solutions. I guess this is the new normal, which is taking into account climate risks, which is important, and so good to see there's an ecosystem there which is very active and in fact is working. I think the good part about the PICAP program is really about reaching the last mile, and that too with market-based solutions. I think this is fantastic. And the fact that you're now wanting to sort of go global, I think this is also something which resonates with the vision of V20 group. So again, congratulations to the entire team for having achieved these results. And for the last couple of minutes that I have, I'd like to share an initiative of the Global Shield, which is of the V20 rather, and this is the okay, can you see my screen? Okay, brilliant, thank you. So I'd like to share a global initiative which is really a V20 and a G7-led initiative on financial. And the initiative actually is called the Global Shield against climate risks. So just in terms of the V20, so we are a group of so I work in the Secretariat of the V20, but our organization is really a membership of 58 developing countries. So we are a subset of the Climate Vulnerable Forum, so which is really the Finance Ministers Forum, where we're looking at the economic and financial aspects of climate change. And so on the screen, you'll see that we have 58 developing countries from the Global South who are our members. So just quickly jumping on to, maybe I should do a screen. Is that better? Okay, brilliant. So just in terms of some evidence, in terms of why there was a need for Global Shield against climate risk. So again, I think if we look at the numbers here, the V20 countries, and we're looking at 55 or 58 of these countries, they've already lost about a fifth of 20% of their wealth over the last 2 decades, and we're talking about numbers from 2015. And I think our latest estimates also suggest that these countries will in fact lose an additional $200 billion through to 2027, even if we keep to the 1.5 degrees temperature limit of the Paris Agreement. But that in itself, really situates the problem and why we need, to ramp up efforts on climate protection. The other aspect, which is, quite critical for climate vulnerable countries in the Global South, is that climate risks and climate change is rapidly, sort of unfolding into another crisis for these countries, which is a debt crisis. And I think in the region, we do have, and we have experienced this, we experienced this in Fiji, for example, in 2016, when we had Cyclone Winston. Immediately there was, borrowing of $100 million, 50 million from the World Bank, $50 million from the Asian Development Bank. So again, I think, in a situation where we're having back-to-back disasters and there's a fiscal squeeze, countries are forced to borrow, and you'll see that there's a lot of evidence in terms of, debt escalation. And B20, in fact, has got its own assessment of the member states. So just in terms of, the Global Shield, what is this ambition? What is this global initiative? So this is more like a global cooperation initiative where we have, brought the G7 and the V20 together, to increase financial, protection against climate risks. And we need to be able to do this in a very systematic way, which is, where countries are in the driver's seat. They determine what the priorities are, and then we take this, forward in terms of, what the priority gaps are, and then we address this. And we need to be able to do this in a very sort of flexible way, with financing, which is, very flexible. We've got, I'll cover later in my presentation, the various financing windows under the Global Shield. We need to be able to deploy the funds, pretty quick, considering that, the need on the ground. And so by doing this, we need to be able to make financial protection very systematic. We need to have a very coherent approach, and we need to have something which is more sustainable, to make more and better pre-arranged and trigger-based finance, which is immediately available, to countries when they're hit by disasters. So this was, the launch of the Global Shield at COP27. And in the next slide, I'm giving you an example of the kinds of support or the protection package, if you like, that the Global Shield will support. So the Shield, in fact, aims to support trigger-based and pre-arranged financial protection against climate and disaster-related losses, with a focus on exactly what we've been hearing in today's webinar on household level. So which means livelihood protection. We're looking at social protection systems, livestock and crop insurance, etc. And at the subnational level, we are looking at risk transfer products, which includes insurance via regional risk pools. And we know in the region, we have a regional risk pool, PICAP, which is very active, and again, developing, very innovative products for countries in the region. We're also looking at, for example, contingency funds. We are looking at forecast-based pre-arranged finance, which is inclusive of forecast-based with natural disaster clauses for debt payment suspension, etc. And then, we're also looking at, shock responsive, social protection, early and anticipatory action protocols, etc. So these are again, very, very, it's been defined at the broad level. But again, it is the countries that will determine what the needs are, and then we should be able to design, the country packages to support these countries. So just as an example, in terms of the way the Global Shield is going to operate, and I'll pretty soon touch in terms of, how are we going to enter, have an entry point into the Pacific. So this example really looks at building and scaling up solutions. So the diagram which you see on the right has got, the light blue shades, which is where the protection, current levels of protection, and those white bars really represent the gaps. And so what we need to be able to do through a very inclusive in-country led process, we need to be able to identify what the gaps are at all levels, and then the Global Shield should help the country to decide, to come up with a protection package, which should in fact close all the protection, gap both at the household level, at the business level, and again at the sovereign level. So those green ones are the new additions, for example, that will, sort of complete the protection package for the countries. So very quickly on the financing vehicles for the Global Shield. So we have got three major financing vehicles under the Global Shield. One is, of course, the RIF, which has been sort of reformed into the Global Shield Finance Facility, and which is hosted at the World Bank, and you'll see the kinds of support that the Global Shield Financing Facility will provide at the World Bank. And then we have the Global Shield Solutions Platform, which is hosted at the Frankfurt School. And this is, in fact, the largest, sort of financing vehicle for the Global Shield, which will finance, research, capacity building, modeling, some data support, things that we've heard, in this webinar, including, of course, premium financing, which is a need for most of the climate vulnerable countries. And the third financing window is, of course, the organization that I represent, which is TVF and the V20 Joint Multi-Donor Fund. And we've got a number of priorities, or at least 5 priorities that we are wanting to, that we are in fact, financing already. There's at least 2 or 3 programs that are already in train. It's moved beyond the conceptual stage, and we are pretty much implementation of those. So these are the 3 major financing vehicles of the Global Shield. So in the next slide here, just in terms of numbers of the pledges of the money that has come into the Global Shield, I think what we have been quoting is about 270 million euros, and those are statistics. They represent core funding support, and of course very specific funding. For example, the US supporting the African risk pool in particular here. So this is the funding support under the Global Shield. And again, for this amount of funding, we've got these pathfinder countries. There's about 8 countries, and the Pacific region as a block has been identified as a pathfinder region. So we need to quickly deploy some resources in the Pacific. And the way we are going to do that is The way we are going to do that is by supporting the regional roadmap that the Forum Island Secretariat is coming up on disaster risk management. So there is a lot of discussions that are happening at the moment, and we want to be able to sort of attach ourselves and align ourselves to the regional roadmap so that we are able to deploy some funding to the Pacific countries, even if it means working in the social protection space, whether it means supporting with premium subsidies or what have you. This is something that is something that needs to be discussed with the countries, but this is the game plan. This is how we are approaching Global Shield implementation in the Pacific. So I'll probably stop there and happy to take any questions. Thank you, Ranadi. Over to you.
Thank you, Nilesh, for that. Unfortunately, I missed quite a bit of your presentation because my internet somehow dropped. Yeah, and also somehow strangely, I also lost all the questions in the chat box, in the Zoom chat box. So I'm going to request Akata to please to facilitate the Q&A sessions because this is still viewable. She's still able to view this. So Akata, if you could please do that for us.
Not a problem, Ranadi, and thank you everyone for your patience. We have a couple of questions on the Q&A box, but please, if you have questions that you prefer to voice out, feel free to raise your hand and we will get to you. But in the meantime, we'll go through the questions that's on the chat box. I suppose some of the panelists have responded to some questions. We have some open ones that are still pending. So we'll try to go through the questions very quickly, being mindful of time. So one of the questions that we have on the Q&A box is on how did the program conduct the awareness activities, and what are some of the specific challenges that you encountered? What approaches works well? Perhaps I can ask Senia if you can please respond to that question. And we also have as one of the participants, our program global lead, Mr. Narasimhan, Krishnan Narasimhan, who's also joined us. So please, Mr. Narasimhan, if you feel free to respond to some of the questions that we will bring out on the session. Over to you, Senia.
Thanks, Akata, and thanks for the question. Yeah, how were awareness raising activities done? So a lot was done through aggregator partners. So the program has trained individuals that were basically located at the aggregator partners, such as cooperatives, to then help doing awareness raising sessions with the members of the cooperatives. And then from there, it was also seen who would be interested to sign up. And then also the cooperatives were helping to aggregate basically those lists for sign up to help with that. So challenges, I mean, some general challenges, I guess, when explaining parametric insurance, especially to an audience that has never had insurance in many cases before. But then also, as mentioned before as well, we realized after a while that we're not reaching women to the same extent as men. So we, then partners came on board, such as the women associations, women market vendor associations, so that not only cooperative partners were partnered with for outreach activities. So I hope that answers the question.
Thank you, Senior. Bella, would you like to respond to that as well, being an insurance company? And I know that you've been quite heavily involved in the communities raising awareness.
Yeah, we did roadshows out to, we actually went to the villages. One of the other things that we did, we translated the flyers into the indigenous language and explained it in their own, not only the indigenous language, but in some of the provinces in their own dialects. Now we provided, because we're an insurance company, disclosure was quite important to us. So we had to go through the whole concept of insurance altogether, which took us a while, but I think at the end of it, speaking to them in their own language helped get the message across.
Thank you. We'll move on to the next question. I perhaps will direct this question to Mr. Kumbat. Given the key role of data in parametric insurance, what are some of the difficulties in identifying and tracking the parameters? And if so, how was this problem addressed? Over to you, Mr. Kumbat.
Yeah, I mean, we faced, I think I've already covered in the presentation. Yeah, hi, am I audible? Can you hear me? Yeah, okay, great. So some of the points I've already covered in the presentation, but primarily, I think one of the challenges which we face in Fiji specifically was, since we're talking about covering excess rainfall, and there is some bit of latency in chirps data, which we were using earlier. So the data was available after 15 days from the end of the month. So if an event has happened at the beginning of the month, it takes us about 40 days to basically comment and say that yes, there is a payout or not. And that challenge is something which we've tried to address in the new design. But primarily, some of these challenges are unique in certain areas, and some of these challenges are pretty much same in every place. One is the validation of the data. What sort of quality of data is there, and how do we validate these data sets? Second is basically consistent and reliable data sets availability, which is always something which we try and address upfront. And the last is communicating the basis risk and the limitations of what parametric insurance has, given the data and context around that. So these are some of the things which I think, again, this has to be included, taken care in the communications for this. But I mean, overall, these are some of the challenges which we face, and how do we address them is basically using multiple sources of data for product validation and design, and also ensuring that we're communicating the limitations very, very clearly.
Thank you, Mr. Kumbat, for that response. Yeah. The other question perhaps I can respond to is, how did you reach the socially vulnerable group? Normally, the transaction cost is too high vis-a-vis their ability and willingness to pay. And I think I touched based on this in terms of using farmer agencies and cooperatives to bring in a group of farmers together, aggregate members, and onboard them to the parametric insurance product. So what happens is that through these farmer agencies, we use them to create awareness around financial literacy in general, And then in particular, parametric insurance. So based on the level of understanding and awareness, should the clients be interested in the parametric insurance product, the aggregator then onboards them, registers them into the digital iOnboard platform. And then the digital platform is linked to insurance companies' core systems, which allows them to verify the data through that digital platform. Once the data is verified and the premium is paid, the certificates are then issued directly to the individuals. But the aggregator partners are able to bring in a group of people together and register for the parametric product after the awareness session have been conducted. And as Belawa had mentioned, these are done in the local language, so ensuring that they understand the information, but that the way the information is transferred to customers is in a way that is digestible, as Sinia had mentioned on how we go about through the awareness campaigns. In terms of the social protection, of course, I had mentioned that there will always be a group or segment of the population that will not be able to afford to pay for premiums. So what happens is that we work directly with the Ministry of Finance, Ministry of Finance, Department of Social Welfare, where government pays the premium for the social welfare recipients, subsidize the premium, and these social welfare beneficiaries are then onboarded through a lower tiered product. So yeah, those were some of the processes that we went about in ensuring that the vulnerable communities and social protection systems are in place to cover every individual, and in making sure that, you know, no one is left behind in the solutions that we implement. The other question is on how active are women in the agricultural sector, and would they pay a different premium compared to men? And I think there's a similar question that was asked, which have been responded to. But basically, at the moment, we have a standard solution in place, but there's works that's already underway to ensure that needs of women are considered in the overall design of the parametric insurance product. And we're looking at possibility of designing a women-tailored climate and disaster risk solution. I will let the other panels respond to these questions. Janina, if you would like to respond to these questions, Belawa, given your representation from the private sector.
Yeah, I'll just on one question there is, how do you ensure sustainability beyond the project cycle? So for us as an insurance company, there's a couple of things that we're doing there. The first thing that we've done differently is we've actually done our own modeling. So using data available from WRMS, we've did our own internal modeling to make sure that we ourselves are satisfied with the risk, as opposed to being handed a product that's already designed by third parties. The second bit that we're working in there is that looking at the learnings, we've also gone out to market to see if there's other platforms, fit for purpose parametric insurance platforms, that'll allow us to address some of the challenges around location data, around availability of data, around latency of data, and we've actually got some really good responses. There's quite a lot of matured platforms out there that have given us demos that we're gonna explore to use, and with what we've seen out in the market, we know there's a demand. This isn't an issue where there isn't a demand, but our challenge right now is to make sure that the solutions that we have is in line with the user experience that the population are used to for other financial services products, and that's where we're spending a lot of time on, to bridge the gap between the experience with parametric insurance to the experience with other financial services products like deposit loans and other traditional insurance products. And because of that commitment outside of the program, we feel quite confident that that this will continue. The paramedic insurance will be a permanent feature in the Pacific. Just
Thank you. Thank you, Bella, for responding to that question. And I think that sort of covers all the questions on the chat box. If I have missed out on any question, please feel free to reach out to us directly, and the panel can respond to that. I don't see any hand up at the moment. If there's no other questions, then I'll hand over back to Ranadi for the remainder of the segment.
Thank you very much, Akata, for stepping in and facilitating the Q&A very seamlessly. So that really brings us towards the end of the webinar, and I will now request the Deputy Governor of the Reserve Bank of Fiji, Mr. Esala Masitambua, to virtually launch the Lessons Learned publication, and kindly requesting our communications team to please share the link to the publication through the chat box so that our participants can get access to this. You should be able to access the publication through the UNCDF's webpage. So over to you, Esala.
Thank you, Ranadi. Can you hear me?
Yes.
Thanks. So before I do so, allow me once again to express our sincere gratitude on behalf of the country and the people that have benefited from this. I would like to express that gratitude to the partners and stakeholders who have made this solution a reality, and especially to Krishnan and his PICAP team. Thank you so much. And it gives me great pleasure to officially launch the Lessons Learned document from implementing the climate risk insurance in the Pacific. Thank you very much. Good evening, good morning, wherever you are, good afternoon, and thank you very much. Vinakavaka Levula.
Thank you, Esala. I believe our communications team will also send the link, but you can also access the publication through the QR code that's online. So that brings our webinar to an end. Again, thank you to all the speakers for your time and the information shared, as well as all the other participants that have joined us today. Vinakavaka Levula and Madhumandra. Thank you.
Thank you.